Good morning, folks, and welcome to another great edition of Money Truth Moments with our very own Money Truth expert, Judy Copenbarger. How are you, Judy?
I'm fantastic. Fantastic. It's a
Love to
beautiful
hear that.
Tuesday morning. I know. I just feel so good. It's really exciting. How are you doing?
I'm doing fantastic. It's another beautiful Tuesday. Got the gym out of the way, so I'm pumped up, ready to do this show. For sure.
Very nice. Very nice. Oh, I forgot to tell you, I ran my marathon. I ran my marathon. So
What?
that was Saturday morning. Yeah. Yeah. And it
Tell
was
us all about
amazing.
that.
I
I want to
came
hear
in
this.
fourth place. April Fools. I didn't do it.
All
I
right,
didn't
you
do it.
got me. You
I
got me
have run
good.
marathons, but not lately.
You had me buy into that. I was like ready for all the details. Oh, folks.
No, I didn't
Uh,
do it. I didn't do it. I've actually been in San Diego for about a week, a little over a week, awaiting grandbaby number two. So
oh,
that's what I've been doing,
awesome.
hanging out with my beautiful daughter and her husband, and just making all the preparations and buying time. So we're gonna have a baby, I think, in just a few days. It's gonna be exciting,
That's awesome.
and
And
that's not April
congratulations.
Fools. That's real.
Thanks for clarifying that because you already got all of us. So we'll have to think of something for you too. But if you're just
Awesome.
joining us for the first time, folks, welcome. Make sure you're following Judy at judycopenbarger.today. It's not April Fool's, it is her website. So make sure that you follow her as well. So, and a happy April Fool's Day. Remember, trust no one, don't listen to anybody. It's April Fool's. So be careful out there too, right? Today, we are actually going to be talking, we're going to continue our finance, helping folks not only for personal, for business, but we're talking about the credit score improvement strategies, right? How do we boost our credit? Proven strategies that can kind of raise our score. So, what do you say we get started?
Let's do it.
So, the big question is, and this applies to not only adults, but even kids just starting out to build credit, right? Why is your credit score so important in today's financial world?
Yeah, and what is it anyway, right? So,
Right.
I deal with this all the time. I was thinking, as I was preparing for today, of all the clients I've helped, mostly their kids and grandkids, like the young ones coming up or younger siblings. What is credit anyway? Why do we need it and what's the credit score all about? It has to do with the cost of money for you. So when you go get an apartment, they want to see your credit score. Are you going to be able to pay the rent every month on time? It's important to the people on the other side, right? If you borrow money from a bank, the bank wants to know, how credible are you? Are you going to be able to pay that money back every month on time? And then if you're going to buy a car, if you're going to have a credit card, the people on the other end that are loaning you money for whatever you're doing or checking your credit, to make sure that you're a viable tenant or a viable customer, they want to know your ability to pay. What are your habits when you pay? And the way that's measured, there are several ways, but the big way that it's measured and the simple, easy button is through your credit score. And your credit score is determined by a number of things. We can get into that, like if you want to improve your credit score or establish credit for the first time, or if you're rebuilding, what you can do to get there pretty quickly. But that credit score is kind of like a number they give you. It's like your APGAR, whatever score. That's how you're rated. So you can make it go up or down. You can move that needle both ways by your behavior. And the way your credit score is measured, there are several institutions that do that, several entities that do that, is they look at your spending habits, they look at your purchasing habits, and they look at your ability to pay your bills back. Do you pay on time? Do you pay ahead of time? Do you borrow too much? Like, are you risky that way? So they're looking at things like that. So it is very important, particularly if you're starting out and at some point you want to buy a house or buy a car or rent something or get into business with someone, they're going to want to know that credit score.
So let's talk some more about credit score, right? So what's the difference in the credit score ranges, right? And what do they really mean? Because a lot of us are oblivious, I think, to credit scores.
Yeah, so the highest is 850. That's perfect score. It's rare that I see that, but I see many people in the 800s. If you have an 800 score or higher, you can get the best interest rates, the cost of money to you. So this is how it works. You go to buy a car and they say, "Well, your credit score is 815. We're going to give you 1.9% interest, or we're just going to not charge you interest at all for the first couple of years," right? You're a good risk. We know you're going to pay that back that money. If your credit score is, 600 or lower, that would be pretty rough. They're going to say, this is higher risk. Chances are you might not pay it on time or pay it back fully. So we're going to charge you more. Your interest rate's going to be 5.9. And the difference of that 4% is hundreds of dollars over the year, maybe thousands of dollars, depending on what car you're buying. So it's the cost of money to you. And the way it's broken down is you have poor credit is 300 to 579. Fair credit is 580 to 669. Good credit is 670 to 739. Very good credit is 740 to just under 800. And then you've got excellent credit, 800 or above. So if you are in the 750 and above, you'll be able to probably get great rates on anything you want to do. You kind of take that number, that they put on your forehead, and you take it to the bank.
So as we're talking about this, there's also a lot of myths out there, right? Or misunderstanding that people have about their credit.
Yeah.
Talk to us a little bit about that.
I think that the biggest myth or the biggest misunderstanding is I should have less credit on my reporting agencies. I should have less credit cards. I should have less out there. And that's not true. So it's like, if I don't owe anybody, they'll know that I have the money to pay it. That's not true. What's true is they want to know that you owe. And when you do owe, you are behaving. You're paying back fully. You're paying back on time, maybe early, but they want to see that you owe something. They don't want to see that you owe nothing, because then there's nothing to measure against. I think that's the biggest misconception. Don't owe anybody and they'll like you. It's like, no, because they don't know. They don't know if they can trust you or not, right? Makes sense.
So I remember in previous episodes that had discussions about credit cards and so forth, right? Tell us a little bit about, there's folks that pay off their credit cards every month. There are folks that pay it off on a monthly. But I remember you always talking about both of those and the reasoning behind the good and the bad of it. So you want to touch a little bit about that?
Yeah. Well, if you pay it off every month, there's no credit line. They don't know. They don't know. They can see you owed $100. It went away. There's nothing reported, right? Because you behaved and you never had a credit that was worthy of reporting. If you owe $500 and you pay it off within 30 days, there's nothing to report. So they want to know you paid it off on time. If you pay it off fully, there's nothing to report. And by the way, the institutions that are watching this, the way it works is a credit card, or if you buy a car, the loan company, for the auto institution, they're going to turn these numbers into 5 places. It used to be 3, but now there's a couple more modern ones. But it's Equifax, and you can Google all these. If you want to subscribe, you can kind of watch how your credit's going. Equifax, TransUnion, Experian. Those are the old, all time. They've been there forever. A couple of them have changed names, but we've had those since we were kids, right? And then there's FICO and Vantage Score. Those are 2 newer institutions modernly that will also take in this information from people you owe money to. And are you paying on time or late? Are you paying on time or late? Are you paying? Did you miss 2 in a row or 3 in a row? That's really going to impact your score.
So talking about that too, what are some of the main factors that determine these credit scores?
Oh, this could be very helpful because they're not always intuitive. So let's talk about it from the aspect of what messes your score up. And then it's just like, don't do those, right? Don't do those. And then your score will go up. And it's amazing how fast it can go up. So if you make a late payment and it's on the 32nd day, that credit reporting is going to happen. They're going to go, you were naughty. Even if it was just 2 days, it was late. So you don't want to forget. There's so many things. You want to auto pay anytime you can. So it's always, there in time. If you're mailing things, or if your institution, some banks will mail a check still, make sure that you do it several days ahead. So even on a holiday or some kind of a mail delay, it's going to get there in time and you don't end up with that late. Another thing that can negatively impact your credit score is having a high debt to credit utilization ratio, right? It's like, how much do you have and how much can you use? So let's say if you add up all the credit cards that you have and there's $10,000 available for you to charge and you owe $8,000, that's an 80% utilization ratio. That's high. You want to be between 15 and 30 at all times, not 0. right? And not 5%. You want to show something. And so you're making payments that are on time, and that's going to show up on your credit report in a good way. Another thing is applying for a lot of credit all at once. And this is a mistake people will sometimes make when they're car shopping. You go into the car and they say, "Oh, well, let's see how much you can afford," right? And they want to know that number so they can upsell you, right? Well, you can only it's only $800 a month for the car payment, and so a lot of times they'll do that. So if you're car shopping and you go to several dealerships, there might be 4 or 5 lenders, potential lenders that are pulling your credit score at the same time. The credit score institutions that I mentioned, they see that. They're like, they're getting ready to borrow a bunch of money. Or maybe you apply for 5 or 6 credit cards all at once. Maybe you're shopping for a good interest rate, or you're shopping for the points deal, right? You do that all at once, they're going to go, are they in trouble? Do they need to borrow money because they're lacking money, or they lost their job? Are they doing something that indicates to us that their risk is higher, that they might not be able to pay it? We don't want to take that on. And that can lower your score. See how it works? You got to think from their side what they're thinking with your behavior. And it's not always true, but they're thinking it's risk from a risk perspective. They're looking at these things. I'm closing your credit card account. Now, this is one that people think, oh, I'm going to clean everything up. I've got 10 credit cards. That's too many. I'm going to close down 9. Not good. Not good. Because now you've done a couple of things. You've changed that ratio. So on the one credit card that gives you 1,000, let's say before you had 10,000 available, now you have 1,000 available, and you go buy a $300 thing. Now you have that higher ratio. See how that does it? If you look at the whole pool, or let's say you charge $800 thing, now that ratio is impacted. Whereas if you had 2 other cards available, your ratio is lower percentage wise. And that's what they're looking at. The whole, what's available to you and how much of that are you using? You want to be in that sweet spot we talked about. The other thing is they're looking at how long have you been good? How long have you behaved? If you have an old couple of credit cards that only had like $300 or $500 on them, I haven't used those in years. They've been in the file cabinet. When the new one comes, I just put it away. I'll just close those down. Don't do that before you think about how long you've had those cards. Let's say I've had that card for 15 years, 20 years. So you get rid of the cards you've had forever and you just pick the 1 or 2 that you like because they have points, or they give you cash back or something. Well, now they're looking at how long have you been a good credit risk? Only 2 years. When you threw away the opportunity for them to see that you've behaved for 15 years. So
that's a great point. Yeah, that's a very good point.
Don't get rid of old credit cards. You might want to keep 1 or 2 just to have that record be extended, because that's a good percentage of how they give you your score. And then if you stop your credit related activities for an extended period, let's say you don't do anything for a long time. And this is counterintuitive. It's like, I'm behaving. I just pay cash for everything. There's no credit showing up. I don't know anything. That's going to impact that, because they don't know, are you good or bad? I don't know if you're behaving or not. Maybe you don't have any money. That's why you're not spending any money. We don't know, right? So from their perspective, that doesn't help them trust you more. And that can lower your credit score.
I have a follow-up question, but first, folks, if you're just joining us, welcome. Make sure you're following Judy at judycopenbarger.today. We're talking about how to help your credit score, how to increase it. Great advice so far. So make sure you watch this at the beginning of the show and also share it out with your friends, family, and business friends as well. So my follow-up question to you is, I'm going to talk about the youngsters, right? Kids that just graduated high school and they're getting into college, and then you see all of these people at the college campuses for credit cards and all of this.
Yeah.
Talk to the youngsters as what are best practices, things to watch out for, and how to not get into, like you just said, applying for like 10 credit cards and all of a sudden your credit score is like nothing,
Yeah. Well, most of those initial credit cards are going to be no's. I think it's best if you go to college with already a credit card or 2 established, and you can either do that by going into the bank, and in a moment, I'll give you some of the best ones right now. I just Googled it the last couple of days. So some really good ones for starting out. You start with a $300 card or a $500 card. The credit limits aren't high, but I recommend that if you have a $300 card, maybe you even have a co-card with your folks, right? They go to the bank that they use all the time. They say, I want to have a card I'll be responsible for, but it's my child's card they're going to take to school. Then I recommend that you use it You know, you have parents that say, don't use your credit, never owe anybody. You want to use that to establish credit, right? We want it pinging on those credit agencies. We want them to know that you're being good, right? And you're establishing that track record. So you get a $300 credit card, you go out and you buy, a couple of shirts and, some shoes or whatever. You spend $100. You don't pay it off all at once. I know, mom and dad, that doesn't sound like you're teaching them the right way. But the reason for this purpose, you want to pay it off maybe over five $20 payments or $21 payments with interest, right? Instead of all at once $100. Why? Because now you have 5 months of you behaving on the record. Before you had no record and nobody will give you any credit. But now you have 5 months established where you have good boy, good boy, good boy, good boy, right? Instead of we don't know. So that's really important. Pay those little balances that you can afford over time to establish credit. After a year or two of that, you'll be able to get any credit card that you want, and you'll have a very high rating, assuming that you're never late. You can't be late.
That's excellent advice, and it's something I think that we as parents need to really get ahead of it too, because like you
Yep.
said, a lot of us grew up with not knowing, everything was just pay cash. You don't want to owe anybody anything, and just go that way too. But you don't. I guess you don't realize the bigger picture, how that's going to affect you down the road. Like you just said, buying a car, buying a house, or anything major in your life when you purchase that.
It will cost you if you don't have a credit rating, or if you don't have a good credit rating, it will cost you because at some point you're going to borrow. I mean, very few people in the United States get through life without borrowing at some point for a business, for a car, for a house. A lot of people have mortgages. So it's kind of difficult to do without good credit. And if you're going to have credit at all, it might as well be excellent. And it's pretty easy to do.
So I know we're getting closer to the end of the show, but what are 3 things listeners today can do today to start improving their credit?
Well, I would say some of the things we talked about. First of all, lay them all out. I would go get a free credit report. So you can just go to Experian.com, right? Just go to Experian and say, I need a free credit report. You can get one free per year. You can get as many free per year as you want if you expect fraud. Sometimes somebody will have the mail stolen from their mailbox, or you'll get a phone call and it's like, we're establishing this, account for you. And it's like, I didn't tell you to do that. Right. So if you suspect fraud, you will get free report from any of these agencies, but you get one every year for free without subscribing. Although I think sometimes it's valuable, I do it, to subscribe. So anytime there's a credit change, higher or lower, they ping you. You get an email that says your credit went up or your credit went down or something happened because of all those little factors, right? So maybe a credit card came off or a credit card came on, or it went down just, a couple percents below that ratio that we're looking at or above, and it'll change that score by a few points. And so I like to keep an eye on that because I do leverage quite a bit in our businesses. So that's something you can do. It's under $10 a month. It's not a big deal. But if you want to get the free reports, you can do that and keep track of your score. Do you mind if I take a quick moment and mention the credit cards that are available right now that have the
Yeah,
best?
please, that would be great. That would be
And this
great.
is according to NerdWallet, right? So they might have some incentive to say this. I haven't looked in detail, but I trust this information. It's probably a good place to start, other than with your own institution or bank that you like. The Chase Freedom Rise is best for no annual fee card, and it has rewards on it. So Chase
Wow.
has that one, Freedom Rise. Chime Secured Credit Builder Visa. Chime Secured Credit Builder Visa. That's best for easy account management, and it's got guardrails on it. So you can't go over. They won't let your child that's like, oh, I'll take all my friends out to pizza because they haven't learned yet that now you have to pay it back, right? So that might be best for that kind of an issue. And the Discover It is a secured credit card, and that's really good to start with because they're going to secure it. They're going to give you probably a little higher amount that you can use if you need it to buy a car or some furniture. You're moving into your first place or something. But it's going to it'll give you a higher amount, but it's going to be secured. So they're going to say, if you don't pay this card back, we're going to go after your funds. We're going to go after your other assets. But you might get a higher limit if you need it. For example, for a down payment for a car, you need several thousand. Usually first cards will not be that high, but that one may be.
Awesome. All right, folks, if you are just joining us, please make sure you are following Judy Copenbarger today. And we are at the end of the show, so you know what that means. I should say credit challenges, right? What's our challenge for today?
Here's your challenge. Just get it together, right? Get it together with your credit. So take a look at where you are. I would say number one in your challenge, pull your credit. If you don't know your credit score, find out. It's a number, right? Just get that number. It's, 725 or 815 or whatever it is. Know what your number is. And then if you want to improve that number, think about what you can do. First of all, set up automatic payments. If you don't have everything automatic, just do that and have it maybe 5 days before it's due and just get into that. It really is the easy button and you'll never be late and it's just handled. Another thing that you could do is look at how many credit cards you have and how much potential you have available in that credit. And whatever you have to do to either reduce or add credit cards to get into that 15 to 30% ratio, work on that. That would be a great thing to do to improve that score. And it happens fast. Within a few months, it happens really fast. That's your challenge.
All right, folks. Remember, if you have any questions, please let us know. And if you're not following Judy, please do so at judycopenbarger.today. Don't forget, we're here every Tuesday morning at 8 a.m. with the replays on Thursdays at 8 p.m. Any last parting words, Judy?
Make it a great day. It's going to be an awesome week.
All right. And remember, don't get fooled because we got played at the beginning of the show. Until next week. Take
Be
care.
careful out there. Bye bye.